Hello, I'm Kim Martin, Head of New Zealand Debt Management at the Treasury. Yesterday, on the 14th of December, the Treasury released the half-year economic and fiscal update. Alongside this, we updated forecasts for the sovereign debt programme, so I thought it was a good opportunity to provide you with an update. I've broken my discussion into two sections. First, I'll look at the economic and fiscal outlook, then I'll discuss New Zealand debt management's related funding strategy. The information shown in the following charts is for the half-year update on the 14th of December and also the budget update from the 19th of May this year. So first up, our third quarter GDP data was released today, as indicated by the green triangle on this chart. Our September quarter GDP grew 6.4% compared to the same period last year. This is slightly above the half-year forecasts that are shown in blue. Turning to inflation, inflation rose 7.2% year on year in the September quarter. Inflation is forecast to have peaked and will gradually decline towards the Reserve Bank's 2% target midpoint over the remainder of the forecast period. Turning to the fiscal outlook, changes to the forecast for the operating balance are shown. Relative to the budget forecasts, the operating balance is stronger in the near term and marginally lower further out in the forecast years. The operating balance is still forecast to return to surplus in the year ending June 2025. Alongside the operating expenditure, the government also updated its capital expenditure forecasts. Combined, these result in a residual cash trajectory as shown. A surplus is forecast to be reached in the year to June 2027, a little later than previously. Based on these projections, New Zealand government net debt is forecast to peak at 21.4% of GDP in the year to June 2024, before falling to 14.1% of GDP by the end of the forecast period. This remains well below the government's fiscal strategy ceiling for net debt of 30% of GDP. That economic and fiscal outlook forms the backdrop to changes that we at New Zealand Debt Management have made alongside the half-year economic and fiscal update. Changes to the forecast borrowing programme are shown here. This year's programme to June 2023 has been revised up by $3 billion New Zealand dollars to $28 billion. The total borrowing programme has been revised up by 18 billion New Zealand dollars relative to the budget forecasts. New Zealand government bonds on issue, you can see, are now forecast to reach 174 billion New Zealand dollars by June 2025. There are three main contributing factors to the increase in the forecast bond programme. First, and most significantly, is the inclusion of Kāinga Ora's future financing requirements into the New Zealand government bond programme. Kāinga Ora, as some of you will be aware, is the key delivery agency for the government's social housing commitments. Previously, it had borrowed from private markets under its own name, but now the borrowing will be undertaken by New Zealand Debt Management and has been contributed to 13.8 billion New Zealand dollars to the programme over the forecast period. Second, changes in the fiscal outlook have also contributed. And third, the impact of higher interest rates, once again, across the forecast period. The borrowing programme also incorporates the impacts of the winding down of the Reserve Bank's holdings of New Zealand government bonds under its large-scale asset purchase programme. The Reserve Bank began sales of its bonds back to New Zealand Debt Management in July this year. It's selling back the bonds at a rate of $5 billion per year, starting with its longest bonds first. And the Reserve Bank expects the bonds held under the LSAP programme to be completely sold back to New Zealand Debt Management by the end of the 2027 calendar year. The bonds that we repurchase from the Reserve Bank are essentially cancelled or retired. Our current portfolio of New Zealand government bonds is shown here. The bars to the left-hand side of the chart are nominal bonds, and those to the right are inflation index bonds. The green bar is our inaugural sovereign green bond that we issued in November. You can see our longest bond is the 2051 nominal bond, which was syndicated last year. Nominal bonds remain our primary funding instrument. However, inflation index bonds remain an important part of our portfolio. And because of that, we've recently undertaken a number of initiatives to promote a well-functioning inflation index bond market. These include changing to a single price rather than a multi-price tender auction mechanism, taking a more flexible and responsive approach to setting issuance volumes and maturities, and also undertaking a tap syndication of our 2035 inflation index bond to create a more liquid line close to the 10-year benchmark point. We issued $2.5 billion of the bond in the tap syndication that took place on the 24th of August. Alongside this, we also bought back $1.5 billion of our 2025 inflation index bond. The breadth of participation in that particular transaction is shown here in the allocation statistics. Around half of the deal was allocated to investors outside of New Zealand. A recent history of all our syndications can be seen here. Syndications remain our preferred method for launching new bond lines, as well as for putting large volume into an existing line. On the 15th of November, we completed the syndication of our inaugural sovereign green bond. It was a 2034 maturity. We issued $3 billion New Zealand dollars of the bond line, and it's our intention to tender further volume into this line, but not before February 2023. At the half-year update this week, we also announced our intention to undertake one further syndication in the fiscal year to June 2023. Subject to market conditions. It will be a 2030 nominal maturity bond. Our syndication allocation statistics really help to demonstrate the diverse range of investors across different global regions and by investor type. It's interesting to note that the longer syndications do tend to have a higher proportion of offshore investor participation. The most recent green bond syndication is shown on the right-hand side of this chart. Another way to view the diversity of investors in the New Zealand government bond market is through the data that is compiled and published by the Reserve Bank. The data shows that the proportion of holdings of New Zealand government bonds by investors outside of New Zealand has picked up in recent months and is around 60%. The dollar value of holdings by non-resident investors has also increased to a record high of 60 billion New Zealand dollars. And finally, this chart shows the yield on 10-year New Zealand government bonds relative to the average of sovereigns with a similar credit rating. New Zealand is the green line with a positive spread shown through time. As a reminder, New Zealand's sovereign rating on a domestic currency basis, AAA for Moody's and S&P and AA+ for Fitch. If you'd like further information on anything we've discussed here or on the outlook or market dynamics, please do get in touch with New Zealand Debt Management on the contact details that are shown. Thank you very, very much for your interest in the New Zealand market. I'd like to wish you the very best for the holiday season, and I really look forward to further discussions in the new year. Thank you.